Hey guys, welcome back to Dominating Your Investments. I'm back for another day of talking about stocks. I just came back after about 6 weeks with my new job. Had my first recording last night talking about Palantir, Nvidia, Tesla, Accelera, about Q4 earnings, and this market craziness that we're going through right now. So today we're going to talk about a small cap stock that is profitable, has no debt, $1.1 billion of cash on hand, and a market cap of only $1.9 billion. And that's Fulgent Genetics. We're going to see if it passes the 5P test that we talk about with other stocks that I look for. You know, what is the people like? Their leadership, their company culture, their inside ownership, problem solving. How big is the problem that they're solving for the company and for their customers, and the growth rates that it can have? Do they have a platform approach? And is this product superior to its competitors, and can they expand for sustainable growth? Profitability, are they profitable, or do they have a path to profitability, which I've already shared that they are profitable, so they will get that check, and we'll talk about how long they've been profitable and can they keep that up. And then predictable revenue. Is it predictable? Is it reoccurring? Do they have high gross margins? And what we want to see is, do we think they have long-term sustainable growth? So let's jump in and go over Fulgent Genetics. Okay, so we're going to start off with people and the company culture and give you just a little background of what Fulgent Genetics does. So this is straight from their Q4 earnings deck. So they say we're a premier global technology-based genetic testing company focused on transforming patient care in oncology, infectious and rare diseases, and reproductive health. The mission is to develop flexible and affordable genomic testing that improves the everyday lives of those around us. So I'm going to just pause there. It's a very clear-cut mission statement, and they have shown to be one of the most flexible and affordable and efficient companies in the world with genomic testing, and they've shown that through the pandemic. So core values: innovation, customer service and commitment, quality and efficiency, and the strategy to leverage our proprietary NGS, which is next generation sequencing, platform for broad application, operational excellence, and disciplined merger and acquisition. So what can I take away from this first slide about mission and core values and their strategy? You see several times they talk about affordable, flexible, and efficient business protocols and running the business profitably, strategically, and smart. You can see your disciplined mergers and acquisition, and we'll show you that they've been very disciplined in not overbuying for mergers and acquisitions. Their operational excellence and the fact that they have generated so much free cash flow and taking advantage of the opportunity for their testing services, and also continuing to produce processes that give them very high gross margins. So the people. So Ming Hsi is the CEO, founder, and Paul Kim came from Cogent with him, as well as James Z. So they all started Cogent Technologies, a 3M company. They sold it for $1 billion. And they've now started Fulgent Genetics about 10 years ago, and then brought on some other excellent teammates and candidates for the different roles within the organization. Brandon has been there for quite a while from Baylor Genetics. They recently brought on the CMO, Dr. Lawrence Weiss. So a very established leadership team. And Ming has a good rating on Glassdoor, and we can see here 84%, little lower on the recommend to work here, 72%, but 3.9 out of 5 stars. Pretty good. Could be better, but it is only out of 62 reviews, so I would take that with a grain of salt. Looking at the fact that when we look at what salary he's taking that I'm very pleased with. Not only taking a 248K salary, but also when you look at company ownership, he owns 26% of the company. So his skin in the game and leadership, and then you look at the overall leadership team, when we look at how much insider ownership we have, 33%, definitely give that a check mark for the people portion of the 5P review. And I look to see that company culture grow and improve over time. So the next piece here, when going back to our review, let's pull up the right one here. Problem solving. Do they solve a large problem? And what's that TAM look like? So we're going to go into the earnings deck and see how they've evolved and changed and actually grown that very quickly, and the platform that they've built for this. And then we'll look at some of the financials. And this will be a short video because we're going to do a deeper dive on this company in the near future. But let's just look at the TAM first. And we're going to skip a couple of these intro slides just to look over at the total target market opportunity. So originally they were just doing next generation sequencing, or generation genomic sequencing, NGS, and now they're helping with reproductive health with NGS, cancer diagnostics. The newest one is their partnership to do liquid biopsy, and we'll talk about the companies that they're partnering with there. So those two new partnerships are Helio and CSI Labs. So they can do genetic panels. They have the most genetic testing and panels available, known mutations, genomic testing overall, hereditary cancer, carrier screening, sequencing services, newborn genetics, and tumor profiling. I mean, we're looking over here almost over $100 billion market, and I believe that they're going to continue to grow the market and opportunities by acquisition and different healthcare sectors to really jump into to help with their genetic testing. I think that TAM's only going to grow more. So you can see here, this is the platform that sets them apart. So it's their proprietary probes in engineering chemistry, their AI and machine learning. This is really a software technology company because they have a software that allows them to do genetic testing faster than anybody else out and more accurately. And so that's how they were able to provide the most low cost effective COVID tests and other next NGS testing. So they have 18,000 plus single gene tests they can do, 900 plus panels. You can see here that the panels have grown extensively over the IPO since 2016, and their cost, their COGS, their cost of goods of sales here is only $25 per test, and they're selling the tests at like $103. So they're making high gross margins. They're very efficient. They're focused on automation and making sure that they can do all the processing in-house, which you can see here, 100% of the volume without the need for outsourcing. And so they have shown to be very efficient with their money, their product, and delivering results that customers keep coming back for. So definitely going to give them the large TAM to go after, check mark, as well as looking at the platform approach. I just see that this is only going to expand more and more and more as time goes on. So let's go back into our review. So definitely got people in leadership, problem solving platform. We already know that they're profitable, so let's jump into that. And then we'll jump into the predictable revenue piece and why I gave it an X here. So we're going to go back to our Simply Wall Street here. I love this app. It's great. Makes it very easy for visual learners. So, market cap 1.9 billion. We can see it's severely undervalued via a dollar DCF, uh, discounted cash flow analysis. But I mean, I wouldn't read too much into these because it only takes a couple different variables to change in a DCF analysis and it can really throw it off. But we can agree that they're definitely undervalued with having 1.1 billion in cash. We'll actually just look at their financial health here. And we got 1 billion in assets, a little bit on liabilities, no debt. They're debt-free, have been for 5 years. You look at all the cash and receivables they have on. I mean, they have a flawless balance sheet. And then what they've paid, which we'll go into another video about the partnerships and acquisitions, has been very minimal for additional growth. So they are definitely performing and they're profitable. They actually are going to continue to be profitable, even though the decline is there. And also look here, you can see return on equity, 43%. That's outstanding. So if we go here, we know that they've had great earnings before. But if we look, we're going to go all the way up here. We're going to see that earnings is going to decline. But you see they're still going to stay positive and profitable. And that's because of the COVID testing, what we think will be dying down. No way to tell what happens in the future, but if it does all go away and that's not part of their business, they're still growing their next generation sequencing business 28% year over year. And they're projected to stay positive and profitable, which means they can reinvest in their business to continue with mergers and acquisitions and R&D and et cetera. And that's what we like to see. So the same thing of showing that they are going to sustain and be profitable. You can see here, though, it's not really predictable revenue because we don't know what's going to happen with the spikes with COVID testing or any other kind of testing that may happen with any other viruses or any healthcare concerns that happen in the future in the macroeconomics. They do have a global footprint, but because it's not clear as to what that growth trajectory looks like after this kind of stabilizes after 2024, I did give it an X on the last piece just because I do believe it's going to be sustainable growth and it's going to be positive. I just can't predict what does that really look like and how does that impact on the valuation. But for me, this is a long-term stock, just like all my other investments are. I just will keep dollar cost averaging and adding to it. And the share price could go down even further with how Wall Street expects here. You can see the analysts are expecting some serious decline, but there's no debt. They've made partner acquisitions that are very strategic for future growth, and they're very good about protecting their equity and their shareholders, and have a great leadership team. So I'm really excited about Fulgent Genetics. In fact, I really need to get my position much higher than what it is today, because right now is the time I want to take advantage while the market cap still is small for the next couple of years. But this is something to hold on to, and I think will do a really good job for shareholders in the long term. So thanks again for watching this short video on Fulgent Genetics and the 5P score. And remember, it's never too late to dominate your investments. And we'll see you in our next video here on Fulgent in the next coming days.